Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 21st of September here in 2021. Tomorrow is going to be a Fed day, which means we're going to be very careful and guarded and protective ahead of that session. And it could be a big one. They will not raise rates. They will not lower rates. There will be no change in interest rate policy, but we will be focusing on what they say about their future plans to taper. What is taper? Taper means to cut back their asset purchase program of bonds and shorter-term securities. And that has been a factor to fuel the market rally in part. So trading participants, just if we're looking at a quick Fed approach, if they look to taper, that could send the market lower. So if they do announce a quicker than expected, and that be earlier, maybe November, maybe October, in 2021 here. So we're going to follow their words very closely, as will the market. Will they taper? They will taper. It's not out of the question, but when will they taper? And that is the question. Will it be sooner or will it be later? That's a simple way to approach tomorrow's Fed day, but it is probably going to be an effective one. So that is what we have on the docket for Wednesday. And that again will take place at 2 p.m. on the East Coast, or 11 on the West Coast. Now, as we go into that, the market has broken under its 50-day moving average. And that has sent us, for the first time, really, in 2021, exception here in early March, well under that 50 moving average. Last time that happened, it did come surging back. This time could be different, of course. That was the plan from last week. And we will be watching for that on the bigger picture. But the Fed will dictate, or the market reaction to the Fed will dictate whether or not we find ourselves by the end of the week here or rallying back, or perhaps somewhere in between. That will frame our positions, our swing trades, and of course those on the intraday chart. For the Nasdaq, I'll actually pull over to the daily chart and highlight that. Remember that uptrends in general do have a structure like this. Uptrends don't go straight up, they don't go straight down. They do have waves or swings. And we do have a downswing. The Nasdaq has been a little bit different compared to the S&P in that it has a few times, twice, broken that key moving average. The focal point now for the Nasdaq is about the 15,000 print. For the Dow mini futures, that has been in a little bit of a sideways range, and the Dow was early to break that average. It actually broke it a little bit later earlier a few weeks ago, earlier in September. And that was on the loss or break under 35,000. And that has sent it down to where the S&P could be traveling. And that is prior lows or the 200-day simple moving average. And for the S&P, at least the futures, that's about 4,100. And on the SPX, that's about same level, roughly 4,100. But it is the Russell, or the IWM, if you trade into the ETF, options on the ETF. Perhaps in this fund here, in the IWM, we'll close that up. And that is where we are looking for range activity. Remember that the Russell is not in a trend. The Russell is actually going sideways, and that favors the short side or the put side of the broader market into or roughly 2,300 or a little bit higher than that, and the long side or the call side of the market from roughly 2125 or just near that. Think of these as ledges, roughly 50 or 25 point ledges, not absolute turning points in the market. It still is probability. And we have had the chop, just to underscore that. It looks like a wild and volatile structure, and it is. But if you frame it as a trading range or a box or a rectangle, then that makes a little bit better sense in how to put trades or manage trades in that environment. The most recent campaign trade has been to short up against the 2325, and that has just about fully achieved the target down to here. So that will set up potentially, if the markets hold, another buy opportunity, just like the other ones. That, of course, goes into later September into October. But again, the Fed is going to be the key driver of whether or not we get these breakdowns and full-on reversals, which means this time it is different, or we just hold support. Now that's in the equity futures. Crude oil has which is a market that trades similar to the equity products, is just continuing its own trading range as well. And it has taken place between, just to be a little simple and easy reference points, about 62, 63 on the downside and about 75 on the upside. And again, the key of these videos are short-term trades, short-term plays, not looking too far out. But again, a market like the equity market overbought does have a better chance to rotate down. And once we hit support, breaking these key levels, trade just about to that longer term average, there's a decent shot to rally up. That is, of course, how to frame very short-term trades. Gold continues to be in its own sideways trading range, and that might be the key focal point for tonight's video outside the Fed, which is just ranges. Gold has its range roughly just about 1850 and about 1750, and that's led to a bull bounce, or at least a buy, off the gold market. That is true as well in the downtrending. I think it's more downtrending, but it is finding support in GLD, which is a tradable ETF, and that's about the 164 print. It is the bond market that is in focus and what we will continue to watch for one of two things. And the Fed will be a big driver about whether or not the bond market breaks to the upside. Remember, as bond prices rally higher, the yield will fall lower. We'll show that in a moment. We do have a full-on trend reversal that took place over here in the bond market. And the bond prices have been going up. A break well beyond 151 continues the uptrend. And by the same token, TNX is our treasury yield, which is the exact inverse of the bond prices. Whenever you see 17, it actually means 1.7% on the 10-year treasury yield. Call it TNX, or the 10-year treasury yield. And of course, 1 or 10 is 1.0% on the treasury yield. And it is, of course, inverse prices. So the bond yield had a rally to the upside. That correlates with rising stock prices. So stock prices were going up at the same time yields were, but yields peaked into April. And they have been downtrending ever since. This will be key into tomorrow's session, whether or not, just like the bond market, this is the inverse, the other side of it, the yield market. If we start to see yields crack and go lower toward that 1% bound, let's see if that plays out. Otherwise, we may have stability into this 1.3, 1.4. And that covers the yield for the U.S. government bonds and notes. Outside the equity market, or outside the broader market, we did have some stocks moving, and just a few of them to highlight for us. Outside of all the Fed liquidity and all the Fed announcement and everything else, China news, etc., we still had stocks that had earnings today, and one of them was Adobe. I won't go into details, but if you are curious about what happened, you can go to the Analyze tab. Always feel free to go inside the Earnings tab about any stock that you have on, you're positioned, or you see a stock about to report earnings. Then Adobe had its, or has its, earnings after the bell, and we can see how that will play out after the video. FedEx does as well. Accenture will have its earnings, I believe, on Thursday, as will Costco. We'll take a look at these. And Accenture is a strong stock, getting stronger, pulling back with the market. FedEx is a downtrending stock, getting weaker. And that is a stock just about to hit almost 52-week lows. Accenture is a strong stock, and noting Adobe is on a pullback as well. Now, Costco has been a strange runner, a strong trender in the daily chart. It is having a pullback that is logical, and it will report earnings Thursday after the bell, as will Nike, which had its own run but has pulled back as well. So volatile markets across the board. There are a few other things just to note. These are stocks making new 52-week lows, and we'll pinpoint a couple of them, first being Las Vegas Sands. And that is one, a rare stock, but they exist, which continue to play to the downside. Lower lows, lower highs, and falling averages make us on the short side. That is one. We have PCAR, which is PACCAR, P-C-A-R, Hormel Foods, we showed that last week, and it got weaker in the scan. And we also have VF Corp and Take-Two Interactive Software. Those are the only stocks in the S&P at the moment making new 52-week lows, but those, if you want to go to the short side, these are weak stocks getting weaker and things that are popping up on our scans. So continue to watch those for additional downside action into the future. But of course, the Fed will take priority or take precedent into Wednesday's session, driving the order flow and getting us paid or guarded with hedges in our positions. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for September 21st, 2021.